Your Listen Local station, right here on the northern beaches of Sydney. You can find us on your radio dial at 88.7 and 90.3 FM. Can't get to a radio? No worries. You can always stream our program live from anywhere in the world at rnb.org.au. And for listening on your own schedule, our podcasts are available globally at rnbpodcast.com.au. So be sure to follow and subscribe so you don't miss any episodes. Now, here is our latest podcast.
Hello again, listeners to Community Radio Northern Beaches, 88.7 and 90.3 FM, streaming live, www.rmb.org.au. Thank you for joining me again, Michael Lester, here on our program Innovation Talk. We're also syndicated on John Menadue's Pearls and Irritations public policy blog, and you can find any one of my 500 or so interviews over the last few years, if you're at all interested, on an archive at Mixcloud, if you just Google Mixcloud Michael Lester or some such. Climate change is our topic in a sense, but particularly natural disaster damage costs, if you like. I think we're already seeing the consequences as a society, and on a global scale, one might suggest, of having to live with the consequences in an adaptive mode, if you like, bearing the costs of climate change in the failure of effective and efficient global action, and including domestic action to mitigate and lower emissions. I'm talking particularly, as I say, about natural disaster costs. And the very question is, how much are we paying in increasing natural disaster costs, which we are, and who's paying these costs, and how fair and equitable and efficient and effective are our current arrangements, including with private insurance markets? I guess the question particularly prompted, not least by those huge, unprecedented bushfires in California, where the damage estimates costs were something in the order of 250, wait for it, billion, 250 billion, and that must be US dollars cost. And the observations coming out of it that many of those properties that went down, the houses in particular, were uninsurable or uninsured, which raises all sorts of questions about who's carrying costs. So in the event, thank you very much for joining us here, our guest. On the line from Canberra at the Australia Institute, David Richardson. David is a senior research fellow who works particularly on the aspects of the economics of climate change, including the issues that we're going to be discussing today. Thank you for joining us, David.
Thank you for the invitation.
David, these damage costs of natural disaster, do we have any sort of a handle of what these damage costs are here in Australia at the moment, and what rate and magnitude do they look like they're growing and increasing?
We come back to the adjective big all the time in this area. Over the last couple of decades in Australia, the consumer price index has increased by 157%, but the price of insurance in a couple of capital cities, Brisbane, has gone up 896%, and Perth 805%. The other capitals tend to be a bit lower, but even the lowest, Melbourne, has gone up 461%. So even Melbourne, we're talking about insurance prices increasing by 3 times the general price level in Australia. We have good data for the capital cities, but only anecdotes for the regions, unfortunately. But what we do know is that the cost of insuring in the regions is so much higher again. And not only that, but some places in Australia now are uninsurable.
I believe that the insurance industry globally, including Australia, as well as climate scientists, of course, have been warning for decades about what's happening here, these increasing damage costs and raising the question of how it's going to be paid for. But no one's been listening.
Yeah.
Why is that? And what's the insurance industry been saying, and how is it reacting now?
One of the main things, of course, is they're reacting with their prices. But we hear, again, this is anecdotal stuff, but the Insurance Council of Australia, they've made the point that, they're trying to work with governments and local governments about raising standards. Anecdotally, you hear examples of, in places like Cairns, if your dwelling built to the standards designed to withstand a cyclone, then insurance is available. But if not, then it's very, very hard or very, very expensive to find insurance.
Well, that question, of course, of building more resilience, in this case, into the housing stock in the face of natural disasters, is very much a matter for government policy. And I think you're implying there that there have been attempts, not least by the insurance industry, to promote better standards for disaster resilience. But I suppose one of the things to be
Yes.
said about that is that that will tend to push the cost onto the individual householders themselves to find the money and the finance to build this adaptability and resilience. And they may or may not be able to afford it, and it may or may not push the price of housing up in the middle of a housing affordability crisis.
Yeah, that's right. That's right. And we have to remember too that a lot of these structures, can be 100 years old. Climate change hasn't had a quick impact, but it's been quicker than the aging process of a lot of our dwelling stock and our understanding of, the areas at risk. The people of Lismore, for example, they were residing in the housing stock that predated our understanding of climate change. And that may have taken 30, 40 years, but it sort of snuck up on people.
I guess it has. I wonder how the insurance industry's been getting to grips with this commercially. As you say, they've on the one hand been increasing prices, but also presumably a lot of places are becoming unaffordable or likely to, certainly with increasing frequency and intensity of all this natural
Yes.
disasters. And I guess that's the scenario going forward. But the question arises about the data and the methodology that they may be using. What sort of data do we have about, vulnerability to climate-induced natural disaster damage across Australia as a basis for the sort of techniques and estimates that the industry is using?
I don't know a lot about the intricate details of that sort of thing, but they put a lot of work into forecasting these sorts of scenarios. And we hear that properties on the same street may have a different assessment depending upon level of the 100-year watermark, if they're near a river and things like that. So they seem to have fairly fine knowledge of exactly where the risks are. And those things are also changing with urbanisation, for example. As the suburbs grow out, a lot of these areas are affected in terms of the ability of the soil to absorb moisture, for example, so that instead of a lot of the water being absorbed in a flood event, it'll run off because there's so much more tar and cement in our cities and, houses that prevent the soil from soaking up the floodwater. So there's all those sorts of things that are being monitored. And it's not just the Australian insurers, of course. They all tend to reinsure against major catastrophes with some of the international reinsurance companies. There's a few of the main ones, reinsurance, Swiss Re. There are a couple of the main ones, but these are global ones too. And this gets back to the earlier point that the global reinsurers, they know that it's the same climate change that's affecting wildfires in California, hurricanes in Florida, but also floods in northern New South Wales, cyclones in Queensland, and so on, which is why we're able to, or expect, that the wildfires in California will have an effect on pricing in Australia because the retail insurers in Australia, they all take out that reinsurance with generally the global players in that market. So global players, they know the risks are increasing, plus they want to get back their losses from California events and other events around the world.
Well, this is a remarkable testament, isn't it, to the globalization of finance industries, in this case insurance, in the way you've described, that our
Yeah.
premiums here are not only being driven by domestic factors one way or another, but we're actually having to wear the costs ourselves of these incidents and frequency and costs all over the world in the ways that you've described.
Yes, if it wasn't the California wildfires, it might have been worse fires in Melbourne, around Victoria, or whatever. But these events around the world tend to be correlated.
Yeah, well, indeed they do. It's called global climate change. In terms
Exactly,
of
yeah.
back to Australia and the sort of data that may or may not be around, I've seen some estimates publicly and by I think a gentleman called Mellon, is it, or Mallon anyway, who's a climate risk valuer and assessor, which estimates that currently we've got some 380,000 properties in Australia which are in a sense uninsurable or unaffordably uninsured, which is 1 in 20 houses. Some of his projections for only a decade on are for that to double to 1 in 10 that are not insurable or uninsurable or can't afford to insure. These are potentially big impact numbers, aren't they?
They are. And that raises another issue. When the insurance companies follow up some of these events, the numbers suggest that with the California wildfires and similar events in Australia, something like 30% of the property damage is uninsured. Whereas we'll have some polling out soon. I don't want to say too much, but it suggests that people are fairly optimistic about whether or not they're covered in Australia. So, and this is speculation, the two don't go together well, the optimism about whether or not you're covered and the fact that after the event, a third are uncovered. So it seems that people do think that they're covered when in fact they're not.
Well, yeah, that's a pretty important issue in all this too, I guess, since it's the householders in the first instance that are carrying a lot of this and wearing themselves in ways that we've discussed. Our guest here
Yeah.
on Innovation Talk, Community Radio Northern Beaches, is David Richardson. He's a senior research fellow with the Australia Institute in Canberra, and we're talking about his work from an economic and finance perspective about natural disaster and climate disaster risks, and particularly, how much they're costing and who's paying for this and in what way and what the trends are going forward. There are many dimensions to this problem, but I guess one of them is that individual householders too are perhaps likely to wear it even in other ways in terms of premiums, because I hear there's a phrase called mortgage prisoners too. This seems to relate to the idea that if you're a homeowner or you want to be a homeowner, you might be stuck with uninsurable property whose property values are going to drop.
Yeah, that's right. There's a problem with obtaining finance, for example. If you can't show the bank that you can get insurance, then you may not get the loan. That can be a big issue in many areas, of course, as we've been talking about. The banks are sort of another hurdle that you have to go through to achieve home ownership. Their requirement that the property that they're lending against is insured.
So if you can't even get a mortgage because you haven't got insurance or can't afford it, you're going to be in a double bind and jeopardy. I saw some figures about the banks. I
Yeah.
don't know how real a problem this is, but I saw an estimate somewhere that Commonwealth Bank, the biggest house mortgage lender, has done a review and suggests that some $30 billion of its mortgage portfolio is exposed to sort of climate risk factor.
Yes, yes.
It's an enormous number, isn't it?
That's right. For some time now, the Australian Prudential Regulatory Authority has insisted that banks do audits of their exposure to climate change risk. This would be the major one, I expect, their exposure to old mortgages in areas that increasingly uninsurable.
Of course, there are interesting flow throughs of all of this and likely to build up over time for the structure of finance, insurance, and banking industries. For example, I believe that evidence out of the recent California scene suggests that as mainline insurers have been pulling out of the insurance markets there for the reasons we've been discussing, with so many properties now uninsured, that a couple of things have been happening. One is that we get responses from new mushrooming small household insurers and insurers who want to come along and say, sure, yeah, we can insure you. They're not necessarily well capitalized and are likely and possible over time, to suffer their own problem. That's one dimension of what could be happening in response in the market, is it?
Well, I'm not aware of that happening in Australia, but we could well get that type of response as people are desperate for insurance and shunky fly-by-night operators may well enter the market, perhaps with no intention even of being there if in the event of a claim.
Well, we've got a different regulatory structure and prudential structure, so perhaps we might have tighter protections against that possibility. But nevertheless, one does
Yes.
see speculation, doesn't one, emerging of scenarios comparable on a global scale from all this to the global financial crisis, which was mortgage-backed securities in that case. Do we see any potential on a global scale, given the huge numbers we're talking about, for destabilization of the international sort of finance and reinsurance insurance markets?
I haven't really looked into that, but since you've raised it, you certainly can't dismiss those sorts of things. I mean, it's not just the fact that lots of shunky loans were securitized, but you mentioned the 30 billion exposure that the Commonwealth Bank has. Now, operate on fairly thin margins. I mean, we know they're extremely profitable and all that sort of thing. The Commonwealth Bank itself has something like a bit over $1 trillion from memory in loans and about the same amount in deposits and operates on a very thin margin between the two. But a big event could well mean that margin is eroded so that while, the assets and liabilities numbers sound really, really big, the cushion isn't big if.
Believe I've read somewhere that the Reserve Bank of Australia has got this sort of issue on its agenda, at least in its public remarks about climate risk and instability in the financial sector, and
Oh,
is
yes.
showing interest in it. What sort of interest are they showing? Do we know?
Well, they're working with APRA. I mentioned their role before.
That's the
Uh,
Prudential Regulation Authority that regulates banks, right?
Yes, yes.
Yep.
APRA is more involved in the intrinsic nature of the risk and exactly what each bank is doing about it, whereas the Reserve Bank has looked at on a more macro scale, but has certainly expressed concern because it's not just households either. The same sort of damage can be done to a house can affect even relatively large businesses in Australia. And we occasionally see evidence of this, for example, when a weather event affects the supply of fresh fruit and vegetables. The Reserve Bank has had occasion to mention this as an outcome of climate change, possibly. They're guarded about attributing definite causal factors here, but they do get a mention as something that increases costs and can wipe out part of the horticultural industries in Australia. And likewise, we've seen recent events knock out roads and similar infrastructure in Queensland. And that can have a fairly big effect on the economic viability of lots of the surrounding businesses and the townships themselves.
Well, indeed, it can. We've been particularly focusing on a discussion on households to try and bring it down to an individual level. But as you say, the issues we're discussing have reach and impact well beyond into the whole business, all sectors of the economy potentially, and through to
Yeah,
government even. I mean, infrastructure is largely a government responsibility, even down to local councils. We live in the Northern Beaches here, and we're subject to a lot of these risks, one of the most vulnerable to natural disaster risks. And the costs to council of maintaining their asset base and picking up the damage costs very high and their revenue base very small. Talking about the role of government, a lot of these questions might raise the role of government because we've been talking pretty much in terms of a free market, if you like, a market-driven system for insurance for all this climate disaster risk to this point. But I
yep,
believe, for example, that in the US and in California, there had been a number of, and elsewhere in America, state government introduced schemes for natural disaster insurance. And in particular, too, I've read that in England, the huge increase in climate related damage claims over recent years has reached such highs that the government only recently put in place a 15-year government subsidized insurance scheme called Flood Re, which tries to,
yeah,
make the soften, if you like, the costs of flood insurance damage and insurance.
yes. And the Australian government, some years ago, coalition government introduced a reinsurance scheme for regional Australia. It's got its problems, but it's an attempt to go along a similar road to the ones you've mentioned. The problem with this one is that it guarantees the retail insurers. So the household has to have an insurance policy to get the benefit of that. And so defeats the purpose to some extent. Also, of course, after every event, there's calls for the government to step in and do things. And that happens, like in Lismore, where the government's assisting people move to higher ground, I understand.
I believe that
But
one of the regulatory approaches that's being played with beyond those sorts of schemes, which raise their own questions, is attempts to regulate the insurance industry in some way, for example, by putting caps and things on insurance increases. Is this a range of policy instruments that we're likely to see more attention to, and are they likely to be efficient and effective?
Well, that's the problem. If you insist, for example, that the insurance companies offer the same deal to a householder in the Melbourne suburb as they offer, say, in Cairns, then, the insurance companies are going to say, well, Cairns is too risky. We might be happy lending or insuring in Cairns if we can get 3 or 4 times what we charge in Melbourne, but that's the only price under which we do it. It's hard to counter that sort of action. What we get instead is the government coming in after any event and assisting people, but it's usually, the complaints are that it's usually too little and, it takes too long to access, all those sorts of concerns that we hear. That does mean that there are problems, firstly, with relying on the market, because the insurance companies, their premiums have increased rapidly already. And secondly, just the availability issue. But, there's another aspect of this I should mention. When we think of the insurance market, we think of an insurance company willing to bet that nothing happens to your house, and you either decide whether to take that bet or not, given their charges. But this all works if the events that cause damage to your property are pretty random. But once you get to the position where in Northern Australia, if you build a flimsy structure near the coast, it's almost certain that, in the next 10 or 15 years, you're going to be blown away. So the market just can't work under those sorts of circumstances. And more in parts of regional Australia, some of these former risks are turning into almost certainties. And markets just can't operate. Insurance markets can't operate. I remember my father used to say, you don't bet on certainties. And I think he's right.
Our guest is David Richardson at the Australia Institute, and we're talking about the economics and finance of insurance for increasingly severe and costly natural disaster extreme events that we know are all happening. How much is it costing? Who's paying and how? So perhaps to wrap up on the sort of government response, having talked mainly about the insurance industry itself, there have been various attempts over time here to talk about a national declaration of a climate emergency, with even a draft bill that I don't think's got through. And there's been some associated talk too about a national climate disaster fund, which is presumably some idea of pooling and subsidy and caps or God knows what involving government. But a fundamental question with a lot of this sort of insurance, is it or is it not, is what's a well-known public policy dilemma, which is called moral hazard. In other words, if people believe that they don't need to look after themselves in the face of drought, or in this case, natural disasters of any sort, that someone's going to pick them up, they won't be doing anything about building their own resilience. Is that right? And adaptability?
That's the argument. I suspect it's true in a lot of cases, which is why it's good to see local government and others introducing tougher standards, prohibiting building close to sea level and things like that we see more and more these days. This is an important part of the government response as well.
Well, I think we might
But
need to finish on that point, David, because we've got only 1 minute left. So thank you to our guest, David Richardson, Australia Institute, for joining us here on Community Voices Radio Northern Beaches. Just on that final point, I mean, and this whole discussion, really, we do seem to be living, and each of us having to pay the consequences of lack of global action, including domestic, on climate mitigation, emissions reduction, in the face of having to adapt and become more resilient and wear all the costs. And this is all being borne a lot too by individual households and businesses, and they're going to be carrying a lot more cost. Thank you very much for joining us, David. It's I was going to say it's been a pleasure talking to you, but it's not exactly an uplifting topic, is it?
no, I'm sorry about that.
No, not to you. Thanks very much, David.
Thank you.
Australia, the lucky country. We've got meat pies. We've got the world's best beer. But most importantly, top of the list, we've got Radio Northern Beaches 88.7, 90.3. Now hitting the entire world on www.rmb.org.au.